Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Thursday, November 18th. It's 6:49 as I'm starting the video. And for you new listeners to the channel, thanks for joining us this morning. Please run your player at 1.25x or faster to make good use of your time. I don't think you'll miss anything. Let's take a quick look at futures. Equities are all in the green. Not dramatically, up about 0.35%. Bitcoin is down again 1.25%. Oil's flat. Nat gas is up 2%. Nothing happening in the precious metal complex. Looking over on macro today, of course, Thursday, we've got jobless claims. We've also got a Philly Fed number. Nat gas inventories come out at 10:30. And we've also got some numbers coming out on the leading economic indicators, so that one will be closely watched. Philly Fed is also a popular data point from the Fed complex. Over on earnings, we've got a lot of good ones today. We've got Alibaba. This is before the bell. Alibaba, Macy's, JD.com, Kohl's, and Canadian Solar. I think the thing to look at this morning is look how Baba and JD do and the reactions there. Over the last several weeks, I've pumped out a lot of information to you guys showing the big disconnect between China tech and US tech. We know the reasons for that disconnect, but those things don't last forever. And there's going to be a big catch-up trade at a certain point. So I want to watch that and be ready for it. One place you could use as a proxy is that KWEB ETF, which is the ETF that has all the big China tech names in it. Just the ones we've talked about, Baba and JD and Jinko Solar and Baidu. Those names are all in that KWEB complex. And it looks to me like if you go to that ETF, you'll see a base being built and a series of higher lows, but the top of the range has been capped. So there'll eventually be a breakout, and I want to be ready for that when and if it ever comes. So yesterday was more or less a consolidation day. I don't think it really changed the market posture. In fact, on the blog this morning, I've included a graphic that shows all the defensive sectors, which are, of course, healthcare, staples, REITs, utilities. All those are in relative performance downtrends. That is, they're not keeping up with SPY. So I think when and if there's a market regime shift, a move to go lower, you're going to see those defensive sectors start to flatten out and not only then start to lead to the upside when people bail out on technology and industrials and financials and rotate into defensives. You'll see that relative performance change. So there's a nice panel on that this morning. And then so I think we still lean long here. We've got positive seasonals at our back between now and the end of the year. We've got a lot of buybacks going on out there. The blackout windows have basically been opened, so companies are free to use their buyback monies now in the marketplace after their earnings have passed, et cetera, et cetera. So I think there's some positives out there. We've always got to watch the levels and all that, but I don't see anything at this time that would give me a tremendous amount of pause or worry. And that's on a relative scale. You're always worrying, but does that worry translate into actually doing anything? Are you pulling money out? Are you changing sectors? That kind of thing. And I think the answer is no. So I still think we lean bullish until we get information otherwise. So here's SPY, the 2-hour. We noted this bearish divergence in place, and the structure looks like a double top. Now, that's a bearish structure, right? Whenever you've got two highs at the same point with bearish divergence, that's a bearish setup. But as we've seen in the past, bearish setups don't mean, oh my God, short everything. It means be aware of it. Be, cognizant of the fact that it's there. But the market has been so resilient with its uptrend. It seems like a lot of these bear setups will or have failed. So as far as today goes, I would key off of 468. If price can hold that level and gain a little momentum towards November OPEX, which is tomorrow, then it can come up to 470, and a half, and then possibly even break out. On the downside, we've got 466 and 464 as downside support levels, and we see them here. So could this roll over? Absolutely. I've got a little uptrend line here. We're on the edge of that, and price could easily come down today to 468 or even 464 if there's some kind of news event. I don't see there being a $5 rug pull today, but you never see that. You never know what's going to happen. All you can do is react to price and know where those levels are and where a potential bounce could happen. And if you're a super active intraday trader, those are your objective levels to shoot against, either long or short. This morning, if SPY can't recapture this level here, and you'll see it clear as day on a 5 or a 10-minute chart, and you want to take a shot to the downside, you know exactly where your line is, and then you'll know exactly where your stop is, but then see how it plays out. And if it reverses, then you've got to abandon that idea. But I think in general, aside from little, tactical 3-hour trades, I think you want to be leaning long into the end of the year. At least that's my thinking so far. Same idea here with the Qs. Not much action at all yesterday. I think today your pivot is 398. Above that, I think the bulls can drive it higher. If it stays here below, we could come in for another touch of the low side of our uptrend channel. And I don't have it drawn in here, but you can easily see it, is bearish divergence here and here. Why? We've got a peak in price here with high momentum and high RSI, and now we've bled off that momentum and made a reversal with price almost at the same level numerically right here at 400, but the posture of the momentum is much lower and lower as well on the RSI. So we've got to be got to be cognizant of that. Got to be cognizant of that. Yellow flag type stuff. Here we are in a 30-minute chart. I don't have it drawn in here, but there's a line at 398 right at the bottom of this large volume over price bar. That's your pivot level. So this isn't exactly accurate. I think you can use 398 as your pivot. Below, you've got room to 396 for a test, low test of the channel, and then a break above 399. Probably see it go up and tag the prior high up near 401. IWM has been having trouble. Hasn't really found that support level. We had a nice breakout here. Now we've been correcting. And what I've done is I've marked this breakout back at 233. 230, 250, something like that. 230, 250 to 233. There's a line of support here where the original breakout happened. So I believe we've talked about this scenario in prior videos where, okay, we've got a giant daily range. We broke out. Now we're coming back. It wouldn't be all that surprising to get a back test of the breakout down at 233. Breakout, back test, go. If I had been sitting there as a trader like the whole time and you didn't pull the trigger here and you didn't really feel like you wanted to get short up here because the market's been so strong, that's great, that's fine. You get a move back into that 233 area for the back test. That's where you want to anchor a long with some duration, with a stop just below. Because if the breakout in small caps is legit, then remember, price has no business going back into the daily range, because that would make this whole breakout thing look fake. Here's a 30-minute chart basically showing you the same things with some intermediate levels. And then here's your breakout level from 233. And, I would use a band there. I wouldn't, from 233 down to 232, 232.50. Give it a little leeway. Don't, get to 232.99 and then pile in with a bazooka short. Let it come in, let it test it, and then see if it emerges with a bounce to re-accelerate higher. FATMAAN, just consolidation. We had this big move the other day in Facebook, and they've kind of sold that off. The chart is still constructive, but right here is going to be your pivot right around that 340 area, give or take. You can see the bears have not been able to really crack this large volume over price support bar. So I'd still be leaning long on Facebook. And if you like it, if you got to move into 338, you could certainly buy that as well and look for a bounce. And then right below that, you'd have to have your stop, because there'll be less support down here than there is up here. So I would definitely have something just below 338 if you got to move down there as your stop on a long side trade. Apple woke up yesterday as one of the better performers in a soggy tape, up 1.65%. And you can see the levels here have been respected very well. And, that's why I draw them, because that's where you're likely to get a price reaction. So the first candle came up into a little shy of 153 where this line was, pulled back, actually had a second run at it, pulled back, and then your third candle had your breakout. So if you were watching and were motivated to trade it, anytime you break above a given level from below is a buy. So you had a chance to buy 153 on the breakout, and then got a move up to 155, which we also had marked, and then we got a little pullback. So this morning, I think you can use 154. If we recapture that level from below, it's a buy. If you get a pullback into 153, then you can buy that as well, because that would be more or less a 50% halfback long entry. So Apple's starting to wake up a little bit. Tesla, more or less having a good opening burst and then consolidating the rest of the day. I think your key levels here on Tesla remain 1080 is now support. It was resistance back here. Resistance, resistance, fake breakout, resistance, resistance, resistance. And now on the breakout, it's support. So we had support here, here. We've had two back touches of 1080 that have been held and respected. And we have this 11, what is that? 11.15 as resistance. So this morning, if you get a pull into 1080, I'd be a buyer. Or if you get a breakout above 11.15, I would also be a buyer. And then your target is going to be this 11.70 level. And remember, the nice thing about this trade on the long side is you've got this big void in the charts. So where not a lot of trading has happened, so there's the opportunity for price to move very quickly. The only fly in the ointment is what's our friend Elon going to do? He has seemed to be pretty crafty. I don't know if he's got a guy sitting by a computer waiting for these pumps or rips to sell into, or if whatever he's going to do is all pre-programmed. No idea. But just that wouldn't keep me out of the trade. If I got this breakout, I'd be a buyer there. But if he comes through with some big sell orders, who knows what might happen. But just from a technical standpoint, I would be a buyer on that breakout. Microsoft got the big breakout the other day, grinding higher. I think your pivot here is 340. If it can get above that, I think you go up to 342 pretty quickly. And then a breakout above 342, we're in more blue sky country. I think you got to be a little bit concerned if you were to pull back and drop below 338. That would mean you're below the channel and you will have lost the prior low. So then your chances are of coming back into 337 for a back test of this breakout. And so very much like the IWM trade, breakout, come back into 337 for a back test of the breakout, right? And so if you wanted to be long, but you missed all this, or you got long and then you took some profits along the way and you're out, or you have a smaller position, when it comes back into 337, that would be the location that I would be interested in being a buyer, because you've got all this support here, and that was the breakout level. So that's Microsoft. Amazon, more or less a nothing day. Just use this 35.50 as your pivot. Right here, you can see that it's been gravitating along that line, 35.50-ish kind of level, and see if you can get a pop off of that support. But certainly be open for, a downside event. If you're just sitting there and you're not in it, and you see a down move break, I'd say 35.30, then you're going to come down here to 3,500 or even possibly 34.60 at these prior low levels. So, always be open to higher or lower prices. But my preference, my leanings would be to the long side. Google was an absolute nothing yesterday. 29.65 remains your pivot. Netflix had a big, I'll call it a fake candle, big opening bar that went up to 700, came back and consolidated. So I think if you can get along close to 690, then that would be your support level where you could take along and see if you can get a push up and above 700. And while I'm at it, even if you've never traded Netflix, alarm 700. Remember that big psychological level, the Jesse Livermore level. When you cross $100 increments, there's a big psychological relief, and then there's kind of a release of price as well. And so you might get, $50 run really fast above 690, or excuse me, above 700, especially if this decides to, consolidate here for a while and then break out above 700. That would make that 700 level even more compelling if it built up a little energy with a consolidation here below 700, between 700 and 690. That would be a perfect setup to get long on a breakout above 700. Semis were kind of soft yesterday. We had NVIDIA after the bell. I didn't look at it this morning, but it is up. They just, I think they blew the numbers out of the water. So on a break above 305, the trend into blue sky country should continue. I would be a buyer there. If it stays contained in this consolidation zone, I think it's nothing. I don't think it's something you're going to try and want to short. I would stay long. I would add on a breakout. I would look to buy dips at these levels. And certainly if you get a gap fill at a certain point and you get down here to 292.50 to test the bottom of this channel, I would certainly be a buyer there. Now this is GM. I sent this trade idea out yesterday. I really like it. Why? Because they're starting to get more credit for their EV type activities. The group in general has been perking up. Ford, I sent out that idea over the last 10 days, working on a 20-year breakout. I don't have those levels in chart with me, but Ford is working on that, and now GM is breaking out here above 64, and with rising momentum and rising RSI, I like it long against 64. So that's that. And then one I wanted to show you that I think is in real trouble, and that's the ARKG Genomics. Now, if you go to the blog site this morning, I've got a chart on there that shows IBB, the large cap biotech ETF, versus SPY. I've got a chart of XBI, which is the small cap biotech ETF, versus SPY. And I've got the daily chart of ARKG on there as well, and this weekly chart. And the point of showing those four charts are twofold. One, whenever you want to compare or see how a sector is doing, you can always just do a ratio chart of that item. Let's just say, large cap biotech. So you take IBB and you set it up on your chart to be divided by SPY. So if the ratio is going up, it's bullish. If the ratio is going down, it's bearish. So you will see that the ratio charts for large cap and small cap biotech are in pronounced downtrends. That means they're not keeping up with SPY on a relative basis. And remember, the ARKG holdings, I believe, are primarily this, the smallest of the small in the biotech space. I mean, she does have some CRISPR and stuff like that in there. And even if you look at CRISPR, that thing is really, really falling apart. And so here you've got a weekly chart. This thing peaked out back in February of 21, probably with the, all the vaccine stuff, the mRNA, those type stocks, those have all been rolling over. So, but here's the point. Let me get to it really quick. You got a weekly chart. It's sitting on key support. Look at the massive void underneath price at this level. You've got a little support here at 55, but that's not a lot. And then you've got a big void down to 35. You get a break here. It's sitting about 72. Yeah, 71.50. You get a break of 70 on a weekly closing basis. I know we're in a bull market. I just got done telling you all the reasons to lean long. But, just like Kramer says, there's always a bull market somewhere. There's also always a place that's a freaking disaster. And whether that's, look at Peloton. If I got my numbers right, the breakout was at 35. It ran up to 180, and now it's heading back to 35. So just because something was, the darling, once that bloom comes off the rose, no telling where it may slide. So on this ARKG, I've got the height of the structure. That's 37% on this right triangle, bearish right triangle. And so a break, just from a technical standpoint, projects down to 45. I think what's going to happen, if there's a break, I think you're going to come down to 55 pretty darn fast. I think you'd see a consolidation there. And then if you get a break of that, 55, 54 area here, I think you come all the way back to 35. It may need some market help to get to that point. But when I see IBB underperforming in a raging bull market, when I see XBI underperforming in a raging bull market, and I see a stock like this that is more or less gone straight down over a period of time of this year in a raging bull market, any kind of market weakness, I think you'll see it here even worse, because I think the whole vaccine thing is settling in to some constant rate. And so if you're looking for a short idea, set yourself an alarm at 70 and be ready to go. That might be a really nice trade down the road. So let's wrap it up there. Hope you guys have a good day of trading. I'm going to be hunting and pecking for new setups today and forwarding them to you. So if you're new to the channel, jump over in the show notes and you'll find a link where you can register for all my content with your email address, and then you'll get everything right in your email box. And for new viewers today, if you like the content, hit the subscribe button and the alarm bell and the thumbs up. Let other people know that you appreciated the content, and then help me grow the channel. So I really appreciate that. And of course, longtime listeners, I really appreciate your support, and I look forward to having a good day of trading with you guys. So this has been Chris Buss with Trader's Profit Compass. Talk to you next time.